For that, let's also invite Rupesh Patel, Senior Fund Manager at Nippon India Mutual Fund, on the show now. Rupesh, afternoon. What explains this extremely range-bound moves that we're seeing in our markets now for nearly a month? In fact, probably even more than that. What, according to you, is going on? What are the kind of flows that we are seeing? What's the FIM mood towards India now?
So, if we look at markets, then from COVID lows, the markets have given very handsome returns. In fact, forget COVID lows. If we look at February 2020, just before the COVID-related correction happened, we have seen markets giving very healthy returns from that point as well. If we look at last 1 year, market returns have not been very great. But remember that, and this was coming on from a base where the returns were very, very high. And we also saw during this phase, market returns came a lot on account of earnings, changing, multiples getting re-rated. Going ahead, and as a result, if we look at our premium over MSCI emerging markets, I think we had gone above our historic averages. And some of the gain which India had, it also happened because of a struggle which some of our emerging market peers were having, whether with respect to COVID or with respect to some of the policies which were being followed there. We have seen that in last few weeks, some of the flows from FIIs have gone to other emerging market peers, which were relatively cheaper, where valuations were still making a lot of sense as compared to India, where we were on the higher end of valuation. So that's what is playing out in the market. Going ahead, I believe in terms of returns, market returns would be more linked or aligned to earnings growth rather than be multiple driven.
Rupesh, the last time we spoke, afternoon, Prashant here, you said you were underweight IT. Stocks have moved on from there. Are you correcting that position, or you think this will not last? This is just a trading bounce. What's your view?
That's a great question. So you are absolutely right. Last time when we had spoken, I had mentioned that we have underweight stance on IT. And that was because of our view that we are not very sure of the bump up in growth for IT services, which we saw after COVID, will sustain. And if the growth is to revert to pre-COVID days, then the multiples are still on the higher side. That is the thesis with which we had maintained our underweight stance on IT. Now, if we look at current quarter results, whatever we have seen, it has been a mixed bag. Whether we look at revenue, whether we look at margin, or we look at deal wins which have been reported, it has been a mixed bag. Yes, the results are not as bad as maybe some part of the market was expecting. But we'll get real picture only a few months down the line when companies globally, they talk more clearly about their IT budgets. And we have to be mindful of global slowdown as well, wherein companies focus maybe more on moving the nature of their IT spending from discretionary projects to more a regular cost saving kind of projects, where margins can be a challenge. So I think we are still in wait and watch mode. We would, before we cover our a significant underweight on IT, we would like to have some more clarity on the demand outlook.
Okay, so you're waiting for some more clarity on IT. Rupesh, hi, Surabhi here. Good to be talking to you again. So I had a question on the related space. And since you're cautious on IT, I really wonder what you're doing with consumer technology, the hallowed names of 2021. What is your current positioning? And if you're not really invested, would you be looking at snapping up bargains at all? We're just discussing Nykaa, for instance, finally some sign of life in that stock today. But what's your overall stance on this part of the market?
So no doubt, some of these business models are very exciting. Some of them will be able to capture the growth opportunity which is lying there. But what we need to see is that whether these models will be able to capture this opportunity profitably. No doubt for some of the listed players, we have seen that the fact that they have managed to raise funds, their ability to sustain a period of slow growth is definitely there. And at the same time, competition, peer companies which are not able to raise funds on time, they would be finding it very difficult to raise funds at elevated valuations in today's environment. So in that context, some of these listed players are very well positioned. But going ahead, we need to see that this large opportunity which is there, these interesting business models which are there, whether they can scale up profitably. Yeah, I mean, some of these businesses are on our radar. At right valuation, we would take some exposure to some of them.
All right, Rupesh, with more questions, but we're out of time. So hopefully you'll join us again sooner rather than later. Appreciate you joining in on that. Well, that's a view coming in from Nippon, India. An update.